we have the daily price chart for Apple Incorporated, stock ticker AAPL. So as we can see here, the stock is attempting to post a rebound, and the price action that we have seen to the top side has been somewhat forceful. However, currently what we're seeing, if we move into the price chart a bit here, we're already starting to see a doji candlestick formation on this price chart. So this is a bit of an ominous warning here for anybody that is currently along the stock. As we can see, there have been several trading sessions now that have posted in the positive direction. None of these recent trading sessions have posted with lower closes than relative to the open. So we can see that this trend has been in place. This trend of upward closing price action has been in place since the August 5th trading session. So this is now quite a while. That's a long series of positive closes for the stock. However, we're starting to see an instance of indecision here, a situation where the share price itself is not being governed by strong, forceful price movements based on underlying bullish momentum. So this does suggest that the stock could be facing a bit of a headway here relatively soon. As we can see, this prior price high, which it posted during the August 2 trading session, came in at 217.71. So this really is a very critical level here, and we have now seen prices break above this level with this recent price gap higher. If we move into the price chart here, we can see that there is a bit of distance here between these candlestick formations. However, if we do see a lower close today, a lot of that space will likely be filled. So currently, we could be in store for a turnaround point here, even though we have technically broken above this prior resistance zone at 217.71. Currently, we're looking at share price action coming in at 224.80. So we're trading right around the 225 mark. And when you're dealing with a stock like Apple, it's quite common to see the market deal with psychological price zones that take on a higher level of significance. So for example, if we see prices move back into the $200 level, you would likely expect to see some buying activity, given the fact that large numbers of people are watching this price action and seeing, a bit of a discount at those lower prices. So as we can see here, buyers did start to step into the market at the prior lows, which came in at 196. So we did see a bit of a dip below that level, that $200 level, but it was quite clear that the market was watching that $200 level quite closely. And this is where the bulls really started to step into the market. One thing that needs to be noted here is the fact that trading volumes have started to decline during this upward trending price move. So we are seeing a strong series of positive closes here, but the trading volumes themselves are starting to diminish. Of course, we're still seeing everything here is still green as far as the trading volume action is concerned. However, those trading bars are starting to diminish in size, and this does suggest that this recent rally to the top side could start to run out of steam relatively soon. So as things currently stand, we're really not looking at much of a convincing break here of this 217 level. We can say that we have broken above here, but there are still some price action framework points here that need to be developed in order to convincingly break back above this level. So if we do see share prices move convincingly above 225, we can see that the next move to the top side would come in at roughly 237.23. This would be the stock's all-time high, and this would be the price high that came during the middle of the July trading period. People that have been watching my trading videos know that a lot of the price action that I've been watching did start to change within the technology sector during the middle of July. Here we can see that Apple did also fall victim to this downside trading activity that did occur during the post-July 11 trading period. So this is a critical time frame here to be watching going forward, because if we do start to approach these price levels once again, the scope for further topside could be somewhat limited, given the fact that this was a major failure zone during prior trading sessions. So as things currently stand, we do have to take note of the relative strength index reading, which currently comes in at roughly the 60 mark, just below the 60 mark. So we're still well below overbought territory. So this does suggest that there is still scope here to the top side, but we do have to keep in mind the fact that this 225 level is pretty ominous, and what we would really like to see here would be a weekly close above this price level. So obviously, we're not at the end of the trading week yet. We can't quite say that that's in the cards for this stock for this week. And the fact that we're starting to see a bit of a slowdown here in share prices and even a potential doji pattern forming on the candlestick charts, all of this does suggest that we could start to see some headwinds for this stock going forward. All that said, I would need to see a fairly significant break to the downside in order to suggest that the tides have really turned for this stock and that Apple share prices are likely to continue on a sustained move lower. Specifically, the level that I would be watching comes in at this 196 level. The reason that I point to this is due to the fact that this is the August 5th low, as well as the rough alignment here with the 200-day exponential moving average. That would be this blue line at the bottom of the chart. So this line is descending quite rapidly, at least as far as the 200-day exponential moving average is concerned. You usually don't see that trend line move quite as sharply as what we're seeing here. So we are seeing a strong slope here in the 200-day exponential moving average, and this area will come into contact with the August 5th lows here relatively soon. So if we did break below there, that would suggest that a major top is in place and that the stock is likely for a sustained turnaround. However, to the downside, I would be more likely to expect share prices to be contained by this 50-day exponential moving average, which currently comes in right around 213.50. If we did see a break below here, the next level that we would have to watch to the downside would be seen with the 100-day EMA, and this currently rests right around the 205 level. So as things currently stand, we are facing a very strong upward surge in momentum. But given the fact that that trading volumes are starting to move in the downside direction, or at least carry less weight than they did before, we have to take this into conjunction with the fact that a doji pattern looks to be forming on the daily price chart, and all of this does suggest that near-term momentum could be coming to a bit of a halt here. If we don't convincingly see a break and close above the 225 level, I would expect to see at least a period of sideways consolidation for the stock going forward. So here's the current market analysis for Apple Incorporated, stock ticker AAPL. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.